You've been investing in stocks for 3, 4, 5 years and you're still stuck under 10% returns every year. Here is why. In this video, we will talk about 5 reasons why you don't have the performance you think you deserve. You've been investing in stocks, picking your own stocks, wasting your precious time doing the research on specific stocks, and you can't go past this 10% yield. You can't make more than 10% in the stock market. In this video, I will give you 5 reasons why. Maybe this will be you, so you can improve right away because you will have actionable tips in this video. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And my goal with this YouTube channel is to help you become a better investor and have a performance that is better than 10% per year. So here are 5 reasons for your underperformance. The first reason is very simple. You're buying great companies, you do the good research, good amount of due diligence, but you're buying at the wrong price. It's not the business that's bad because you've done the research, you have spent hours analyzing great businesses, great quality businesses, but it's your entry point. It's about valuation after all. Without valuation discipline, even great stocks destroy returns. You have the most common example, that is Microsoft in the dot-com bubble. Microsoft at the time was a very good business, excellent business, almost a monopoly, great margins, growing revenue, growing free cash flow, growing net income. Everything was going in the right direction, but the PE ratio was 80. So even if you had bought the best business on earth at the time, a PE ratio of 80 will completely destroy your returns. Okay, and it took 15 years for the stock to get back to the same level after this. The same thing is true for all the quality compounders, quality companies that people are overpaying for. And this is the first reason, a scenario I see a lot for my clients before we work together, which means they do the research, they know how to analyze stocks, but they just overpay. And if you overpay for one stock, you can get lucky and be safe. For 2 stocks, you can get lucky and be safe. But if your whole portfolio is filled with companies that are all overvalued, you will end up with very poor results. And this is the reason why you are stuck below 10% per year. So what is the opposite scenario of this? You want to invert, always invert. Well, you can have a proper framework, a proper threshold of about, a PE ratio, for example, and you never go above this PE ratio. You can take, for example, a PE ratio of 20, 25, 30, 35. It depends on your risk tolerance. But you absolutely want to avoid companies with a PE ratio above 50, 60, 70. It's the perfect recipe, perfect formula to waste your time and your money. So first reason, entry point and valuation. Okay. Second reason, you're confusing activity with progress. You're watching charts, you're listening to the news, you're buying every dip, you're reading earnings. None of that matters if your portfolio lacks coherent long-term strategy. If you don't know what you want, you will never get what you want. I see a lot of people managing their own portfolio, but you have a little bit of value plays, value stocks, growth stocks, speculative stocks, emerging market stocks, or speculative stocks, tech, Nasdaq-driven stocks, AI stocks, a little bit of everything. And people think you need to be smart about all the topics of the world, which is not true at all. Again, if you want to reverse this reason of underperformance, how can you fix it? You do the absolutely reverse, which means you only concentrate your attention span and your portfolio into one specific sector, one specific kind of investment. For my portfolio, I want quality compounders, companies that are growing double digits and shareholder friendly with dividends or buybacks and etc., with minimal capex and a lot of efficiency. This is it. No speculative play, no value plays. The large majority of my portfolio is filled with quality compounders. Next question for you, what is your style? Maybe you are a value guy and you don't want to overpay, you don't want to go above a PE ratio of 15. So be it. Stay in your lane. Only dedicate your attention to this and you will find these opportunities. The problem people have right now is too much information. You have a low attention span. The attention span is getting lower and lower and lower with this digital world, especially with AI right now. So a lot of activity doesn't mean a lot of success. You want to be like a surgeon, do very few things per year, make very few decisions, but good decisions. And if you reduce the number of transactions you make on a yearly basis, you will improve your performance. I'm telling you, because you will get much more focused on your portfolio. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Third reason why you're not having the performance you deserve: you're holding losers out of ego and not logic. And I want to take the example with Evolution AB, Evolution Gaming, that can look solid on paper, but if you don't know what to watch, they quietly drag your whole portfolio down. And I know this from experience because I've been a shareholder of Evolution for a few years, and I sold because the fundamentals deteriorated. It was my process, it was my framework, and I sold. And maybe some people are still holding Evolution AB. Why? Not because of a rationale behind it. No, just because it's too painful to let a loser go. Because it's too painful to take the loss. I'm telling you, you will have losses in the stock market. You will have big wins, but also big disappointing investments. It will happen. The best investors are wrong 1/3 of the time. I suppose you are not the best investor in the world. I'm not the best investor in the world. So we will make mistakes more than 1/3 of the time. Let's say 40% of the time. It's okay. Fair enough. You can keep on winning with winners. You hold on. And then you trim your losers. You get rid of the losers. This is fine. And I see too many people holding on to the losers as the fundamentals are deteriorating, just because they don't know what to do, just because it's too painful to let them go. Sometimes it's like relationships. You have to cut the weed to grow better. Exactly the same is true for portfolio. If you want to good, healthy portfolio, you have to be objective. And if the fundamentals of businesses, if a stock becomes a loser because, I don't know, the CEO left, the fundamentals left, everybody is leaving, maybe you have to leave too, because the story is changing. Fourth reason why you are stuck below 10% performance: you're chasing complexity instead of clarity. It's linked with too much information, the point we've seen before. Buying US tech, foreign stocks, unhedged currencies without a real framework compounds risk, not wealth. Investing can be that simple. I'm the living proof of simplicity works best, because I only want my portfolio to be filled with simple companies. The simple valuation process, simple framework. Simplicity will help you as an investor. You don't need complexity. You don't need a complex DCF. You don't need a complex model. You don't need a complex analysis to analyze everything inside the business model. The thesis of an investment must be extremely simple. How do you know if your portfolio is filled with simple investments? Well, the exercise is to pitch your stock to a child in 1 minute. If you can't explain what the business does to a child in 1 minute, under 1 minute, it means you don't know enough about the company. It's not simple enough for you, okay? You need to have a lot of simplicity in your model. It will help you, because if you avoid complexity, you also avoid the traps. You also avoid the risks, because with simple companies, simple stocks, you know what you own, you know what you're doing, okay? Next point, that would be the last point for today's video. You're trying to fix it alone. After 3, 4, 5 years, if you're still underperforming, it's not more information that you need. It's structure, feedback, and accountability. This is exactly what I help my clients do inside the coaching program. So a lot of people are managing their own portfolio and they've been struggling for years. and they don't want any help. They want to continue on their own. And most of the time, 99% of the time, if you continue on your own, you will continue to make the same mistakes again and again and again. You don't know what you don't know. If you can get some help, if you have the time, if you have the budget, and you can join a group that will help you, you will stop wasting your years alone. The learning curve will accelerate. So it's an investment after all. But I know the cost of inaction for some people is huge. If you are managing a stock portfolio of, $1 million, and you are doing 5% per year, every year, but you think you can make 10% per year, you can go from 5 to 10% per year. Your returns, if you have a $1 million portfolio, your returns can go from $50,000 to $100,000. So the cost of not knowing what you don't know, the cost of inaction, of staying alone in your lane and doing 5% per year, is costing you $50,000 every year. It's huge, and it compounds every year. It's 50K last year, 50K today, this year, 50K the next year, again and again and again and again. And I see too many people that are drowning in too much information, alone in their room. They keep reading, they keep watching videos, they keep reading books, but they just don't know how to perform good in the stock market. So literally wasting their time doing 5% per year, when they could have done much better with the right tools. But because of ego, because of a lack of good structure, they just don't want any outside help. And I'm telling you, communities are the best way to improve as an investor, because it will give you accountability. If you need a coach, if you need some friends to chat about stocks, you need serious people to surround yourself to improve your performance. And this is exactly the reason why I created my community, my coaching program. Only serious people can join, and we all help each other, and we'll all improve our performance and our framework to analyze the best stocks. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.